Hey guys, thanks for jumping into this charting update for Qredo. I wanted to take everyone through the local price action as well as upcoming targets, support, and resistance to look out for. So anyone that knows me knows I've been tracking all the Qredo chart action since it launched pretty much. I have a whole bunch of saved files here for different charts that I've been following from day one, but you could see it here. If I zoom in, there's a whole ton of them. But anyways, we're going to get into more of the local price action first, and I'll show you what's going on more recently. So I'm going to go into the 4-hour chart first. Actually, we could even do 12-hour just to get a better look. So this is the local price action. We came off a bit of a descent from here, and in the last group of 12-hour sessions, we've had a local bottom here, which is around $1.82. Then we had a higher low here, a higher low here, and a higher low here. So this would constitute a series of 3 higher lows from our Pico bottom over here. One of the things I like to do when I'm assessing local PA is let's assume this is all the information we have from here. So we only have until maybe here. We have a established local bottom, and then we have a higher low here. So what I would normally do is just create a trend line between the two and extend it out. And this right now would be this is our demand line. This is where buyers step in and they buy because they see value in the token at that price. The rule of thumb is as the price goes up and the demand line slopes up, buyers are entering the market at subsequently higher prices, which means the sentiment is shifting to the upside, and that they are willing to pay more for the same token than they were here at this moment in time where the sentiment was lower. So if we track this on the replay, what ends up happening is we establish another higher low. So you'll see as this plays out, this higher low forms over here. So what I'll do is highlight the new trend line. So now this is our supply line. This is our peak bottom, our most recent peak bottom. And then we connect it with this, and this is our running supply line. So if all the information we had was from here, this would be our new supply line. So focus on that. Then the price action runs up again, and it hits the supply line again. So based on the original supply line here, and then the basically an increase in delta where the supply line is sloping upward at a faster clip, we could draw a arc showing the convexity shift. And what that means in traditional markets, typically when you get this shift in convexity to the upside and you see it rounding upward like this, you're getting a bit of an acceleration, which suggests local price action anyway is going to be sloping up, and the bias is to the upside, which it clearly is if you zoom into the 4-hour. So this is the local price action. Now keep in mind there's this local high over here at 310, and then a slightly higher high over here around 320. So we'll approach that in a moment. We'll go through that. So one of the patterns that we have running here on the 4-hour, or we could even put it on the 12 or the 8. Actually, I think the 8-hour would look best. We have a discernible 3 rising valleys pattern. So I'm just going to pull up what the pattern is and overlay it into the chart so you could see the theory behind it. Alright, so if you look at this schematic here, 3 rising valleys assumes that you just came out of a downtrend, a very pronounced downtrend, and then you hit your valley number 1, which is right over here. Then you got a peak. So after that you had an impulse up here. That's this one right here, peak number 1. So valley 1, peak 1, and then you descend and you make a higher low on valley 2. So that's right here. And then you form a higher high, which is your peak number 2 right there. and then you make your third valley, which is also a higher low. So what this assumes is that if you came in, if price action descended in, and you entered the pattern here, and it started to move in this direction, forming higher lows and higher highs, this is your third valley in a row. These are your two peaks. The moment that you break this neckline, which is your most recent peak, the assumption is you will make the measured move target, which we take from the valley, so your peak bottom to your peak top, and we apply it to the neckline where the breakout would happen here. And this would be the target. So coming out of this local pattern on the 8 hour, 4 or 12, however you want to, whatever time frame you want to view it on, regardless, the main target for this pattern is 460. So it's a very bullish signal for at least the local to midterm price action. So that's the three rising valleys pattern. So another one that's starting to play out and develop daily, you can look at it on the 12 hour, is the ascending wedge or an ascending triangle, something like that. Sorry, trading view is a bit laggy. I'm not sure why. Come on, buddy. I'm recording, bruh. Let's go. Anyway, it's a mess today. But the idea is when you've established an ascending wedge or an ascending triangle, you enter the triangle and you form a bottom, and that's one inflection point. Then you hit the top, so this is like your ascending supply line, and then you impulse down. So now you have one interaction with it, 2, 3, 4, and the fifth one is what makes it real, right over here. So you'll notice the way we've plotted it, it's now ascending from this bottom within the ascending wedge or triangle, and its next target is going to be a slightly higher high, or maybe even the higher high over here, which is around 320. So if this plays out, I'll show you in the next pattern what we're looking at. But the idea with the ascending triangle, if that's what it was, is similar to the three rising valleys, where you take your bottom where it started and then your breakout point over here, and then you would simply apply it to the breakout point there, and this would be your effective measured move. So again, 450, 451. So it's close to where the three rising valleys pattern should play out too. So now we're within a range of 450 to 460. So keep that in mind. Alright, next pattern we're going to look at is a cluster of 4 hours showing up. So after our last bottom over here at 191, we entered this ascending parallel channel where you have 1 touch, 2 touch, 3, basically 4 and 5. And the idea here is that 5 touches within the channel define the extremities, so the upper bound and the lower bound, and it would indicate that after this bottom over here, we're about to ascend. So essentially this is the way it's moving at the moment. So we enter the channel, clip here, touch the top, base, So now we're projecting out to here. That's going to be our next step in that 340 range, which is also kind of aligned with the 350 to 360 range. But now I'm going to bring in the rest of the 4 hour patterns that have developed here. So again, with harmonics, and I'm a harmonic trader, is a lot of these ratios will play out on every time scale, whether it's a 5-minute chart, 4 hour, or a 12 hour, it doesn't matter. Even sometimes on the monthly. We went through one earlier today. But the idea is within that parallel channel, we also got a bit of an ascending wedge defined by those 2 yellow lines. So they're not parallel, they're not perfectly symmetrical. One is kind of oriented a little bit flatter, and then the other one is aligned with the parallel channel. But here's our first pattern in the yellow. That one's kind of like a modified bullish Gartley. And you can see it doesn't close quite at the 786, but it gets the impulse there either way. When it taps the bottom of the channel, it moves 48%. So it elicits the response you would want at the bottom of the channel. Then the idea with harmonics is the theory of harmonicity. While one wave is printing the equal and opposite structure, so here's a bullish structure, here's a bearish one, it starts printing wave one of the second structure. So at the same time there's two patterns printing. So here's wave one, and then it falls into wave two, and it closes at the top of the wedge or top of the channel over here at the 113, which is very typical of a bearish deep retrace shark. And then it gets the response you would expect right at the top, where it hits the 113 and it drops the price almost 28% to the bottom of the channel. And then, as it did the previous two times, it hit that demand line and it caught a response. So now we're ascending as of this moment, and the pattern that's starting to print on the 4 hour is another bearish bat. So the idea behind this pattern is the first retrace is almost 50% here, it's only 47. Then you have a shallower retrace from B to C, and then it's targeting the 886 Fibonacci retracement. So if you just ran a fib from D to A, your 886 is right there. And that's where you're expecting it to close out within the channel at 315. So that's your next target. So these are all micro patterns that are playing out within a very well-defined channel or ascending wedge. And this will take us to our next patterns. So we have a 12-hour pattern now. And again, this is a ascending triangle. So if I zoom out, not everything is highlighted here. What's going on? Oh, 12-hour. Let's go. So this is best seen on the 12 hours. So this is more of a midterm pattern compared to the 4-hour ones that were printing. But the idea was we descended pretty dramatically, and then we hit our peak bottom over here around 181, and then we had an impulse off there that formed our X point, and then we dropped into our bearish pattern. Okay, so then the B point is the first retrace, which is about 50%, which qualifies it as a bearish bat. And what we do is we mark it off with this dashed line at 310, because this is going to be critical resistance on the way up. As you could see over here, it was basically a lot of sell pressure right when we hit that B point. Now, the idea behind the bat action magnet move, or BAM, is we identify this B point, the first retrace of the first wave, and the idea is the moment you break it on the ascent from the C point over here, the moment you break this, you get an acceleration to D, which is right here, the target, and that would be 396, almost 397. So the idea is the pattern starts here at X, it comes into this ascending triangle here at A, it forms your B point, which is your first retrace of this move, X to A, here's your retrace, B, and then it taps the lower bound of this ascending triangle and forms your C point, and then it makes a higher low here. So unless it broke this C point to the downside, this blue bat is still in effect. It's still an active pattern that we're trading. So the idea is now it's ascending, and the moment it breaks over this line, the B point, we're going to have this bat action magnet move kick in, where everything's going to accelerate to D. So you're going to see a lot of FOMO and people stepping in. And the idea is from where we are now to the target, that's 43%. But even if you just entered on confirmation when the target broke at B, on that breakout, you're looking at a 27% trade. And then there may or may not be a retrace at the target. It really depends on how much power this move has. And what the price action is going into the 886, because this 886 could very easily morph into, sorry, one moment, it could very easily morph into a 1272, although it's not likely. So then your target would be around here at 486. But again, I expect the reaction here just because the ratios really add up to 396 being the target. So that's another pattern that's printing at least in the midterm. Alright, so where are we on the macro? So I'm going to pull up the daily chart. And you can see here, our first parabolic run formed this, what I call a bullish ape. Again, I'm going to be trademarking this pattern, but the idea is it's exactly like a Gartley, except there's more tolerance for that first retrace here to B, whereas a Gartley has to close at the 618. This one can go easily to the 786, and then your final wave from B to C to D. On that C to D extension, it could close at the 886 instead of the 786. So this is a major pattern, and on the daily it took a while to print this pattern. So if you look at the origin here to where it closed at D, that was 126 days to print, and then it caught a reaction at the end. So if you just traded the bottom over here, you would have made 131%. So it was a very nice reaction. So what's happening now is that when it closed, here at D, it formed a bottom, caught a reaction at the terminal bar here, and then it got 130% pump. People naturally took profits up here, and then it came back down to test. This right here is what could be a potential type 2 reversal, and the way that works is simply when you come off the main pattern and you close out here at D, you get your initial reaction off the D point, which is the well, leading into it, it's the potential reversal zone, but when it's confirmed, that's your pattern reversal zone. So it'll hit that area of resistance here at B, and then retest this D point here, and then this is your retest, which constitutes a type 2 reversal. Then it gets, a lower high, but then a higher low, and what it's doing is accumulating now in preparation for the big move. As long as it's creating higher lows, what you're doing after this type 2 return is you're creating checkbacks here just to give participants confirmation this is in fact the bottom. And then when people start to get a little more confident and they're done accumulating, the big wallets are done accumulating, that's when this happens, and then you go to your targets. So now I'm going to map out what patterns on the macro scale exist and how we can overlay them to where we are now. So one of the ideas we went over earlier was the idea of harmonicity, where in harmonic pattern trading you'll have one pattern printing the first wave, and then you'll have a polar opposite pattern in terms of the bias printing, starting its print on that A to B leg, moving into B to C. So what we have going on here, at least this is what I think is happening at the moment, is we're printing a bearish shark. So coming out of this really nice bullish pattern, we got the reaction, but it didn't really cross the threshold we wanted, and then it retested, and now I believe we're printing this pattern. And the requirements are very simple. I mean, this isn't perfect, whoever made this, but the idea is you start here and you have a descent, which is our A to B, well, technically X to A. Let me just overlay this properly. Alright, it's not doing it the way I want it to. One moment here. Yeah, actually this will do it. Alright, so we have our X to A, which is this move here, and then we have our retracement. And the idea is it could go up to 786 and still be valid, although it is a deep retrace. So the next move, you'll have a lower C point than A, which, ignore the letters this guy is putting up here, but the idea is your X and B are your A and C. So you have a lower C point over here. And then you launch the last part of your wave, which is the C to D extension from here to here. And it can either close at the 886, which would be right here on this dash line at $8.88, and the deeper retrace version of this pattern will close at the 113, which is going to take you to $10.83. I suspect it's going to be the deeper retrace, mainly because these patterns will usually mimic depth on the second wave as the first one. So if you have a deeper retrace on that first wave, like here, I would expect a deeper retrace on the second wave. Otherwise, you have a very incongruent pattern that looks more like this. It would go to the 886 right there. So it could do this, but my guess is it's going to there. If it was a shallower first retrace, let's say over here, then I'd imagine this would be the more congruent pattern for the shark. So again, this is just experience. I'm not trying to predict the future, but based on experience, it feels like this is going to be a deeper retrace to the upside, especially when momentum kicks in. Now, not forgetting the first pattern, the bullish ape, this is a bullish pattern that we would measure the fib from this point down to where it closed over here, this point right here. And when you draw the fib, you get your golden, I use a modified golden pocket just so I could cheat the algorithmic traders and bots, but normally it would be the 618 to the 65%. I just extend it by 1% both ways, and that is the minimum target. So that's the golden pocket where this first blue harmonic should be retracing to, and that would be 660 to $7.10. So that's your minimum target off that particular harmonic. So that's on the macro, that's what I'm expecting. And again, the move from where we are now, that's 200% to get to the minimum target, which would be a bullish cipher at the 786. So that would be right there. The mid-level target is going to be over here, which is a shallow retrace bullish shark. And then if that ends up being the target, this will go up to 231%. So from 200, it'll go to 231. And then your top target is going to be the 113 here, which is 305% on the daily. Then at 113, you have this concept which exists both in Elliott wave theory and harmonic. Fibonacci traders use it too, but it's called the failed wave. And the idea is the moment that you get an extension in the price action, let's say this builds from here to here, here, back down, and then you get your C to D extension. This is your 113 where you see a dashed line. It might catch a bit of resistance here and then consolidate underneath, and then back test and continue. Odds are the moment you break out on the 113, your new target ends up becoming the 1618. So that would take you to here. So then your expectation is the moment you break this level, a failed wave would kick in and take the price all the way to 1466. Again, this could be a year away, this could be a month away, we don't know, but I'm just giving you the theory based on pattern trading. That would be the 1618. So the other thing you could do, if you suspected on the macro this was the next wave structure building, you could take a trend-based fib extension. I always use a magnet just so it pins perfectly to the points that I'm trying to connect. So I draw from this point where the wave structure opened up to the this mid-level local high, and then I drop it to the bottom over here. And the idea is you're looking for the 1618, which would be around here at 959, and that's more or less the 100 with your X point you see here, which was that part of the harmonic. And then your 1618 on the fib retrace is here, which is your 2618 basically on your trend-based fib extension. So this would be your max target, 2618 to the right here. So between the 1618 fib retracement here and the 2618 trend-based fib extension here. So your target, the ambitious target, is going to be 1466 to 1435. That's assuming you break above the 113 on the macro structure. So hopefully that gives a little more context to the price action. I know a lot of moon boys will buy and they think, oh, I bought 2 hours ago. When Lambo? Where's Lambo? And that's not how crypto or any asset class works. Some of them do that, but I mean that's because we've been desensitized by meme coins. The real ones, the real DeFi assets like Qredo, they're going to take time. Last items I wanted to point out was using the Haikanashi charts, you can establish trends. So the idea of Heiken and Ashi, they mean trend and pace. So the idea is it simplifies and smooths out the candlesticks, and it gives you a clear-cut directional bias. So what you're looking for essentially is a clear support zone, which we have here, and it's been tested a few times and holding. So then you can flip it into 4 hour, and you can establish whether it's being held on the 4 hour, and it is clearly. So we have strong support. Now, one of the things I'm also looking at is RSI. So I use a RSI strategy where basically if you're in the bullish control zone, I look for what the peak top was and I draw it down to your peak right here. This is your peak test of the RSI, and then what I look for is when this green band over here, which is your actual RSI, breaks out above this RSI cloud that I created. And the idea is if it breaks out from the bearish control zone and then breaks out of the RSI cloud and retest, basically it's back testing the upper bound of the RSI cloud, and it's holding in an uptrend, in a very clear definitive uptrend, right? So just look at these nodes on the bottom. And now you're above the bearish control zone and you're about to cross the moving average on the 50 for the RSI. And again, I'm using the 14 length, so it's a 14 period RSI, and 14 period moving average. So we're about to cross over it again above the 50, and all these conditions are met, which means we're mega bullish and we're about to have a breakout very soon. So you could even look at that on the 4 hour, and I use a 4 hour strategy as well. And it's a very similar concept. This is our first high, this is our second high. So right now what's happening, we're in an uptrend here to here. So if you connect the nodes, basically you're in an uptrend here. We're also breaking out, we've already broken out of the RSI cloud on the 4 hour, and we're back testing it successfully above the MA. And the idea is even if we come back again and retest, we're going to retest this uptrend here outside of the RSI cloud on the 4 hour, above the bearish control zone, and likely above the 50 RSI in an uptrend. So again, even the 4 hour is extremely bullish. It's starting to look like it's getting momentum to the upside. So that's another thing I'm looking out for. And the last thing I wanted to show you guys was the DeFi perp chart. So again, this is an index that takes a cross section of all DeFi assets. And if I look it up real quick, DeFi perp FTX. It's basically taking, yeah, here it is. So DeFi, Decentralized Finance Index, contains the following coins. So it has a whole composite index for DeFi coins, at least the ones that are most liquid and traded. So KNC, MakerDAO, ZRX, Ren, Synthetics, Comp, Tomo Chain, Rune. So basically, oh, why is Cream in that one? That should be removed. AVAX. So basically all the big ones are in this, and a couple duds as well. And what it does, it kind of gives you a finger on the pulse of how DeFi is doing as a whole. Because if these legacy protocols are doing well, then typically the rest of DeFi is going to be doing well as well. So you could see here it's also formed a bullish shark, and it closed out at the 886, and then it did a type 2. What's going on here? Then it basically did a type 2 return here and back tested here with a check back on the right, and now it's running, but it's running again into resistance on this line here, which is established all the way back. You can see there's many interactions with it. It's very reactive, but we're looking to break above it in real time. Like, actually, as I'm doing this, it seems to be going up. We're literally about to break above it. This is wild. Look at this. We're like right there. So the idea is you're going to want to see it break out and back test and then continue. And if it does that, each move that comes off there, there's usually a big run for DeFi. So here's one. Here's another one when we broke out and back tested. Here's one as well. So there's one move, and then another one, 73%. So it looks to me like DeFi is ready to go. We even broke out of a supply line. So that was our original supply line, and we back tested it twice, and then we back tested the horizontal box over here. So I think DeFi is ready to go. And if we consider Qredo you know, an industry leader for DeFi protocols and basically the institutional on-ramp for crypto, then I'd imagine it's going to do exceptionally well once we really get moving with DeFi, which I think is going to happen the moment we break above this B point right here. So I'm going to mark it in right now, and then just create an alert. So the moment that we break above that, I want to be aware, because I think DeFi is going to really run. It's going to be like a DeFi summer by then. But this might actually happen in 2 weeks the way we're running. So anyway, that was for Qredo. I believe the chart let a few people down, but these are mostly moon boys that wanted an immediate reaction. And that's not how crypto works, because keep in mind, Qredo ran when everything else was down. So maybe it has an inverse correlation with everything else. But either way, it'll do well. You just got to be patient and know that there's a lot of big moves coming up. Anyway, guys, if you have any questions, let me know. I'm here. Cheers.